Now I am going to discuss with you friends the cash flow statement. We have a cash flow statement line by line. We have understood there are three types of the cash flow activities in any business. Number one is the cash flow from the operating activities. Number two, cash flow from the investing activities. And number three, cash flow from the financing activities. So typically, this is how a cash flow statement is prepared by a company which has got these three components. So for ease of understanding, let me break this statement in three parts. And the first part, we focus on the cash flow from the operating activities. Now, cash flow from the operating activities, friends, will have two components. The component number one is the profit that is generated by the business. Obviously, we understand whatever profit is generated by a business, it is of course is the operating profit because this profit has come from the operations of the business. So that is the component number one, and that is the profit that the business has earned from the operations. There is another component of the cash flow from the operating activities, and that is changes in the current assets. And I'm sure you will very easily be able to understand. If in case of a business, the inventory has increased by 20 crore, receivables have increased by 30 crores. Now what does it mean? It means 50 crore of the cash of the business has got locked into the inventory and receivable. So that means it is use of the cash from the operating activities. It means what? It means so much of the cash outflow has taken in the business on account of increase in the inventories and increase in the receivables. Contrary to this, another situation. A business was focusing on the working capital of its operations. As a result of that, they applied all the management tools and techniques, understanding, experience, training and everything. As a result of that, they have been able to bring down the inventory and receivables put together by 30 crores. Now it means what? Since the inventory has and the receivables have gone down by 30 crores, that means another 30 crores are available in the hands of the business. And that is why increase in the current assets will be outflow of cash from the operating activities, and decrease in the current assets will be inflow of cash from the operating activities. So this is how your first cash flow from the operating activities will comprise of two components. Number one is the profit, and number two is the changes in the current assets. Then we come to the second component of the second type of the cash flow in case of a business, and that is known as investing activities. So remember, as I said earlier, when you are buying an asset, it is cash outflow. When you are selling an asset, it is cash inflow. Cash inflow under the heading from the investing activities. So in this case, tangible assets, property, plant and equipment, you can see the figure is negative. It means what? It means the company has added property, plant and equipment to the tune of 19,267 crore. So company has added more assets. That means so much of cash has been used in the business on account of the tangible assets, that is property, plant and equipment. Likewise, you can see here tangible assets under development. What does it mean? It means intangible assets. Now this figure is appearing positive. Now remember, this figure is appearing positive. Why? Because as of the last balance sheet, company had capital work in progress of intangible assets under development, right? Which has reduced now, which means which has reduced. That means so much of cash is now available with the business on account of reduction in the intangible assets under development. So this is your second type of the cash flow from in case of a business, and that is cash flow on account of the investing activities. Let us now go to the third type of cash flow.
Sir, I had one question.
Please, please.
Sir,